This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Almost 3 years ago, investors thought the Federal Reserve was behind the curve on inflation. Now they have just the opposite fear. The S&P 500 slid 2.1% between Friday, July 26th and Friday, August 2nd. It was the third consecutive negative week, dragging the index back to levels from mid-June. Technology stocks, especially semiconductors, continued to lead the selling. Almost every economic number missed estimates. Non-farm payrolls increased by just 114,000 last month. It was the lowest reading since January 2021, missing the 175,000 gain expected by economists. Unemployment rose more than expected to 4.3%, the highest since October 2021. Initial jobless claims were higher than forecast. Continuing claims, which measure ongoing joblessness, hit a 33-month high. The Institute for Supply Management's Manufacturing Index also missed estimates as new orders weakened. Jerome Powell's Federal Reserve nonetheless left interest rates unchanged and was noncommittal about future cuts. That made some investors worry policymakers will let the economy slow or drift into a recession. Bond yields plunged in response. The yield on the 10-year Treasury note declined almost 41 basis points, the biggest drop since the coronavirus pandemic in March 2020, according to TradeStation data. Another issue is the lack of catalysts over the next month. Most of the big earnings reports are now done, and the next Fed meeting won't happen until September 18th. Even the inflation report next week may have less impact because markets now firmly believe policymakers will start cutting rates. The kind of summer doldrums has been mostly bearish since the coronavirus pandemic. For example, the S&P 500 has declined the last 2 years in August and the last 4 years in September. Some investors may also expect a pause because stocks have gone up in 8 of the last 9 months. Apple was an exception to the selling pressure last week, holding its ground after results beat estimates. Some analysts saw evidence that its new AI initiatives are paying off and could drive an iPhone upgrade cycle. Amazon.com, on the other hand, had its biggest drop in more than 2 years on Friday, after revenue missed consensus forecasts. The Philadelphia Semiconductor Index fell 9.7%. That was its biggest weekly drop since January 2022, when the last bear market began. Part of the decline resulted from Intel cutting guidance. Its resulting 32% sell-off represented the company's worst week since the stock market's infamous crash in October 1987. Banks tumbled, giving back sharp gains from the 2 previous weeks. Energy and small caps also struggled, the kind of weakness in economically sensitive sectors, as consistent with fears of a slower economy. Utilities and real estate investment trusts, on the other hand, climbed. Those groups would potentially benefit from lower interest rates. Communications also rose, in part because of strong quarterly results from Meta Platforms, T-Mobile, and dating company Match. Moderna had its biggest weekly drop since 2021, after weak coronavirus vaccine sales hurt guidance. Western Digital and Micron Technology were both swept up in the broader chip sell-off. And now let's chart the market. Last week's pullback continued a trend of weakening momentum since mid-July. For example, the S&P 500 tested its 100-day moving average for the first time since November. Second, the index formed a bearish outside day after testing its close on July 23rd, which was 1 day before the index had a sharp sell-off. It also broke a series of higher lows, which some chart watchers may view as a bearish flag. Given the increased volatility following a long period of calm, some traders could expect sharper moves in August. They might see the May 31st low of 51.92 as a potentially important level. The Japanese yen is also rapidly appreciated against the United States dollar in the last month. That might have a negative impact on sentiment based on patterns in previous years when investors sold the Japanese currency to buy risk assets. We'll now turn to the agenda this week, which has less economic data, but more earnings. The Institute for Supply Management's Service Sector Index is due today, and CSX issues results in the afternoon. Mary Daly, a voting member of the Fed's Policy Committee, also speaks. Caterpillar, Amgen, and Supermicro Computer are 2 of the big names tomorrow. Wednesday features crude oil inventories. Thursday brings initial jobless claims and a speech from Fed policymaker Thomas Barkin. Eli Lilly, Expedia, and Gilead Sciences report earnings. Nothing important is scheduled for Friday. The following week, starting August 12th, is more active. It has key inflation data and earnings from big retailers, including Walmart. Thanks for watching. Please visit TradeStation.com for more.